What a great day today. We have a very, very experienced and interesting person with us, Adrienne Brace. Adrienne is going to tell you her background. It is very, very impressive indeed. She is my sort of go-to CPA accountant when I need her services, and we'll talk about what those would be for assessment of a business. Oh, we'll talk about that in a moment. So two major things that we're going to talk about. That is tax implications of selling a business, and the thing that I absolutely demand a good due diligence on any business that a buyer is buying. But first of all, Adrienne, thank you very much for coming to join me today.
Thank you for having me.
My podcast. It's a great pleasure. First of all, give us a little bit of your background, if you will, please, how you came to get to where you are, what you do.
Sure.
And I think you're a Floridian. Are you a Floridian?
I am not a native Floridian, but I am a long-term Floridian.
Okay.
I am from the Midwest, though.
Really?
Originally. Yes.
Really? Okay.
A little bit different lifestyle.
Absolutely. Well, we're in Florida now, so
Yes.
tell us a little bit about your what you've done here.
So I attended the University of Central Florida.
Mm-hmm.
I graduated summa cum laude with a bachelor's in business administration and a minor in accounting. I then pursued the CPA licensure in the state of Florida, which is a very lengthy process, a 4-part test. I then went on to open my own practice, and we have rebranded to Infinity CPA.
Infinity CPA.
That is correct.
That's where we should look for.
Yes.
Infinity CPA.
Because the possibilities in business are endless. And that is what we do, is business accounting.
Business accounting.
Yes,
okay.
Absolutely.
Yeah, but it's not just that. You've got a sort of a bigger view, haven't you? Rather than just business accounting. I think you're a bit more of an entrepreneur, right? A supporter of entrepreneurs.
Yes. I am definitely a lifelong entrepreneur. This is not my first business. And that's really what we are there for, is to help other entrepreneurs grow their dream and to give them the tools to develop the strategy and the clarity that they need to operate their business. Because really, accounting is the language of business. Warren Buffett uses that quote, and we find that to be absolutely true. And you need that financial clarity to make decisions.
If Warren says it, it's got to be.
That is absolutely true. I will take his advice.
Oh, absolutely. So your customer base is what, just here in Central Florida? Is that right? Or
actually, we have clients all over the United States. You know, with the use of technology and Teams and virtual meetings and you know, the internet, you know, together, you know, there really is no need for the old standard meeting room and face-to-face meetings. If you know, you have people in different locations, we can work with anyone across the United States, you know, using the technology that's available today.
Okay. Oh, great. That's wonderful. Yes. And I think business as you think, personal, maybe not so much. Business. That's
correct. We do focus on business. Of course, you know, we always will assist our shareholders and business owners with their personal tax returns. So that is a very important part of the practice. But we focus on helping entrepreneurs and other business owners run their business and really have that financial clarity that they are looking for. And we are a full service, full cycle accounting firm. So we handle every single aspect of the accounting you could need within your business for you.
Okay. So we met a number of years ago.
Yes.
And see, I can be quite smart and realize work with people who are good at what they do. So Adrienne has done some due diligence work for me now. This is my biggie. I really believe that due diligence has to be handled correctly when we get to the appropriate point in a deal, and that is normally really more or less immediately we go under contract. And I turn to the buyer of the business and I say, could I have your list of due diligence questions, please? At which point they often say, oh, I don't really know what they are. So I say, well, I think I might be able to help you there. And why don't you meet Adrienne, and she will help you with that. So that's a critically important moment in the purchase of a purchase and sale of a business for all parties. Really, really important. So let me ask my first question, if you will. Would you, from your standpoint, not from my standpoint, from your standpoint, what would you say is the purpose of due diligence?
Due diligence is the verification of financial data that has been presented by a seller, and there is now a buyer who has committed to purchase the business based on that financial information. And we are collecting additional data to verify the accuracy of this information. It's very similar to buying a home in the inspection process that you go through when you purchase a home.
Right.
You have a product that is being represented, and you now have time to verify that information and make sure that what you are committing to buy based on that information, that it is what it represents to be.
Okay. All right. I just want to make one little point, if I may. I feel it's so important that when the and we'll talk about the exercise of due diligence, but when due diligence has been completed, and you give your report to the buyer, and the buyer, then I say then to the buyer, have you? Yes. Okay. Yeah. Good. Okay. Fine. Then there's a specific sign off that I ask the buyer to undertake, and I do that for the benefit of all parties, of course. It's a real big moment. I make a bit of an issue of it, so sorry about that. But I do ask the buyer to say, okay, yeah, I'm prepared to sign off a contingency release. So a bit of detail now. What information would you be asking for?
Whenever we interview potential clients to take on due diligence projects, I explain to them what we do is we cast a very wide net, as you have experienced in our interactions.
Yes.
And we provide a very, very detailed, inclusive list of things that could be relevant to the business.
Okay.
And it's important to also clarify with that sometimes we're asking for things simply to get the confirmation that they are not applicable to that business. So we're going to ask for everything I can think of a lot of the times to start eliminating that, to get the seller to say, we are not subject to this licensing. We are not subject to paying Florida sales tax, different things, to get that confirmation that we're not looking for those things, because that is part of the process, is to get them to confirm they're not subject to certain things.
Okay.
So we start
That's
there.
interesting. Okay.
Yeah, we start with a very wide, broad scope of work, and then we narrow it down based on that initial questionnaire, how the seller responds to those initial questions of saying, okay, we don't have this, we do have this. And then we will go back, and that's when we start asking for the applicable items, the bank statements, always, the tax returns, always. We also, merchant service statements, state sales tax returns. We look for payroll returns. We will look for purchase receipts from inventory items if we have a sale that involves inventory, because we want to verify that they actually have purchased that much inventory and it is not just a number sitting on the balance sheet to make the balance sheet balance, things like that. So we really cast, like I said, a wide net, and then we start to refine that based on the seller's responses really during the initial. And they may not realize that is part of the due diligence, is them answering no to those questions. So
okay.
Any document that we could take to derive information from to verify how did we get to that number being reported on that line of the P&L, the tax return, the balance sheet. So that is what we're looking for.
Okay. Well, this is just I sometimes think maybe I frighten people a little bit with this. This is not rocket science. This is regular stuff, and I like that. I hadn't really what you just said there about just checking if it's a no, it's a no. You know, that's
But
it.
now
Yeah.
you've confirmed it's a no.
It's a no. That's right. Yeah. So that's very good. Okay. So let me just elaborate a little bit. That what's the danger signals? What are you checking for? What are you searching for? What could pop up?
So that's a good question. Now, part of the reason I asked for all those different types of information, you say, well, why do you need our payroll returns when I have a number right here on my P&L that says this is payroll? So in accounting, in audit, there's testing and sampling. So what I'm looking for is, of course, we're looking at the face value of, well, does the tax return match what the profit and loss says, and vice versa? Right, you know, what we've told the IRS that our business has done during this specified time frame. What I'm looking for is, can I derive that same answer from using multiple different data sources?
Okay.
So I'll give you a very basic analogy or example of that is if you have a business that says they have $1 million in revenue. Well, I can verify that on the P&L. I see, okay, well, there's $1 million and there's $1 million of deposits into the bank on the bank statements. Okay. So if we left it there, well, we have $1 million over here and we have $1 million over here. Well, what do we have on the tax return? Well, we don't have $1 million. But we have $1 million of deposits. And I start seeing that I go back into the year before this business got listed for sale. I start seeing these large deposits. So we have $1 million on the P&L, we have $1 million on the bank, but we don't have it reported as revenue to the IRS. And I don't have these large deposits reported on the merchant service or, let's say, a sales tax return. So where do these deposits come from? Well, it could be identified that these deposits started getting made in anticipation of listing the business.
Right. Gotcha.
See,
so now I tell you that's experience. That I tell you that Adrienne's saying that because she's come across it. I'll bet you.
Yes.
I'll bet you
$1. So we're looking to, can we get the same answer using multiple checkpoints?
Right. Okay.
We're looking for consistency in this information.
Okay. So there's various businesses have various information. Some people just can't supply all this, and it may well be that you come to a conclusion that it looks okay, but you really would have liked this bit of information, this bit, and then it's down to the buyer. I guess you say, well, here's my report. Unfortunately, we couldn't get this, couldn't get that, but yet there you are. There's the information. That doesn't mean that the deal can't go ahead. I think that's important to stress. But it's the call of the buyer. If it's a biggie, they'd be a bit unwise to go on, wouldn't they? To go ahead. But if it's small stuff, they might do. I always say that the bank statement is where the rubber meets the road. How thoroughly do you check that? How thoroughly does that have to be checked?
We verify every deposit amount month by month to make sure that, we will determine a margin of I guess we could call it error or variance, I guess would be a better word, a margin of variance between what the cash deposits are and what is reported. Again, like I talked, not necessarily cash, but just what the deposits are.
Deposits. You really look correct. At every.
Correct.
Ooh.
Yes.
And we're talking, by that, I don't know if it's established. Normally we're looking at 3 full years.
Correct. Yes.
And maybe where we are, obviously the tax return hasn't been completed, but where we are in the current year with the P&Ls.
Right. So going back to the previous statement, we're looking for that consistency. There may be some timing difference at the end of a year that a deposit didn't, get made until the next year, on January 2nd, but the bank statements are absolutely necessary for a solid due diligence process.
Okay.
Yes.
Just one question, one point I wanted to make actually. So when I talk to business owners, I think less so these days, but certainly a number of years ago, I used to find that. So, well, yeah, well, you see, my CPA's done this. They take care of that. And I'd say, well, they don't take care of it because they have Just tell us, just for everybody's sake, the difference between compiled, reviewed, and audited tax returns. Just if you would, just so that everybody just understands what that actually means. Oh, the fireman, he wanted to know. That is not the first time the fireman's been by, I have to tell you. Right, over to you. Sorry.
Sure. So compiled financials are just that. We are compiling information. Okay. So I am providing organized financial statements based on information that is provided by the client. I'm taking, if they tell me that $30,000 deposit in their bank account is from gross sales, I am putting it on the profit and loss as gross sales.
Okay.
A review, I might say, okay, I would like to see your merchant service deposit. An audit is you are going to the source to verify the information.
Okay.
So to elaborate on that a little bit more, compiling them is just what it says. I am simply taking information, I am organizing it, and I am presenting it.
Okay.
If I'm reviewing it, I am looking at it and doing a step more or two verification with you, the client or the business owner. I'm saying, okay, well, I would like to see your merchant service deposits. I want to see the 1099s that you filed for the year to make sure that this number is accurate according to what you filed with the IRS, for the amount of 1099s. Does that correlate to this expense on the P&L? An audit is where you are actually hired as an audit engagement and you are verifying with the other party, so to speak. If a client presented that they had paid off a loan during the year, I would actually say, okay, I need to get that verified by the bank, and I would go directly to the bank and verify the information.
Okay, that's good. Anybody who's a business owner, you should probably know this, but listen carefully. And that people who are thinking of buying a business, that's now I have to say, in my opinion, you would know, 95% of small businesses, it's compiled. Would that be correct?
That is correct. Yeah, that would be an accurate statement. Yes.
Yeah. Okay. So that's okay. It's okay. It's fine. And everything, we do our deals on that basis. We fully understand that. But just so that we're clear on that. Which is more important, tax return or the P&L?
I think they're equally as important.
What I've always said that.
Yes.
I'm so pleased you said that.
Because if they're not in sync, and like I said, determining that margin of variance between the two, you've got some questions to answer about that.
Good.
And I would definitely, like you said, it may not be a deal breaker, but if there's a large variance between what is presented on the profit and loss and what is presented to the IRS, I might question if I want to invest in that business.
Oh, there you go. Because at the end of the day, we want a happy buyer and a happy seller. That's why we're doing that. Let's just have a chat about the balance sheet, just for a bit of fun.
It is fun.
I have to say, I talk to business owners and I say, well, look at that income statement, P&L. Okay, fine, that's good. What about? Shall we have a look at the balance sheet? Balance sheet. Oh, that's that fifth bit of paper. I don't tend to look at that too much. Am I right there? Is that what you find? A lot of business owners don't actually.
Yeah,
balance sheet's really important.
It is very important.
Really important.
Yes.
Yeah, let's just talk about that, please. Just where it's important, the asset side of this is obviously.
So accounting is a science, and it's a system of numbers. And the system of numbers has an absolute answer.
Yeah.
And it's really perfect because everything has its place.
Okay.
And that's what the balance sheet does. Right. Is if there's a problem in those financials, I'm going to find it in the balance sheet because the balance sheet will then not balance. Now, there are software programs common accounting software that no matter what data you put in, you will get a balanced balance sheet because that is what it's programmed to do, is to provide you that. But that's not what accountants use.
Okay.
So there is absolutely a high importance of a balance sheet being accurate and correct, because that is really where you can see there's any issues with the profit and loss. They are definitely equally as important. And I can look at a balance sheet, and from that balance sheet, I can almost immediately identify if there's a problem with the P&L.
It's funny. So in fact, today, where are we? Whatever day it is, 2 days ago, I was with a business owner, and so we were talking about obviously the appraisal of his business. And I've had this conversation so many times. Well, I pay myself a salary, but I also get a distribution. And my answer is, but you see, this is what happens. You've got the income statement. The income statement gets the money in, pays the bills, and then let's say it's an S corporation. It's the easiest. S corporation, and at the end there's a bottom line, and that's what the S corporation is making. And then that all goes, this is my phrase, goes to teams into the balance sheet and rattles through the balance sheet at the end of every month. Remembering income statement is over a period of time, balance sheet is a snapshot, and obviously you just pick a date normally at the end of the month. So that's what I say to be. So the distribution is really comes from that bottom line.
That is absolutely correct.
Oh, thank you.
Yes,
thank you.
it's from the balance sheet.
Okay.
Yes.
All right. Okay. Good. So let's just. Oh yes. Would you recommend buyers to do their own due diligence?
I would not recommend buyers to do their own due diligence.
Don't do it, please.
Like I said, based on the information that I requested, and really what to me the foundation of the due diligence and why to hire a licensed professional to do it is because of that multifaceted review and check of that information. Like I said, I have the ability to look at documents and can pretty easily see if there's something amiss from these. And it's that repetitive verification that I'm going to take a sampling of this data and I'm going to make sure that I can now produce that same answer over here. And it's really what happens underneath that initial review of it that is the important piece of it. And it's dissecting that in a way that if you dissect it 3 different ways, you're going to get the same answer. And unless you have that background and understanding of the accounting system and how that works, you may not be able to realize some things that may be amiss to a professional.
Absolutely. And what I do, I say to buyers, I say, okay, it's time for due diligence. Can I have your list? My strong recommendation is that you use an accredited CPA to help you with your due diligence. If they then say, well, I can do it, then I write to them and I say, I have given you my recommendation and I'd like you to confirm if you decided not to take my recommendation. That's how important I feel that it is to do properly. Okay, right. Well, let's just switch on to another tack then. Let's just talk about the tax implications of selling a business. So we don't want any surprises for our seller here at all. So what should sellers be looking at when they are at the point of selling their business? What should they expect? Now, I'm going to throw this one in. And many people probably know this, but I'm going to throw it in anyway. C corporation. Tell us about a C corporation. What happens there?
So a C corporation is its own living, breathing entity, completely separate from the shareholder.
Okay.
So if you sell a C corporation, you are going to be taxed on the capital gain based on your basis of the stock of that C corporation.
Okay. And what does that mean?
So that means that if you started a business with $20,000 and you sold the business for $1 million, the only basis you have in that is $20,000. So you're going to pay capital gains on $980,000.
Okay. Look out. Look out. Now, I had one other question on that, on the C corporation. You can switch a C corporation into an S corporation.
That is correct.
Believe.
Yes.
But if I think I know the number of years, but I'll just ask you. It cannot be treated as an S corporation for a number of years for this purpose, for the purpose of sale. What is it? Is it 5 years now, or 7? It was 10 at one time. Can you just remind me? She's forgotten. I've caught Adrienne on a question. I believe it's 5. Is that right? Tell me. Oh, I'm so pleased. It's 5.
Yeah, I don't know. We'll have to take that
out. We'll look under advisement.
We'll take that
out. Okay. Oh yes. Oh, this is a good one. Knowing your and I always say I've in the past, and I have been with the seller to meet with and I'm only too delighted to do that with the seller's CPA, just so we all understand that there will be tax implications of selling the business. I cannot give tax advice. Oh no, or for that matter, while we're talking about it, legal advice. But I'm only too pleased to meet with a seller's CPA, and so that you know exactly where you're going as when you sell the business. But if here's the specific question: if a seller is asked to and decides to hold a promissory note. So let's say it's a promissory note that, let's say it goes on standby, as in no payments, for 2 years, and then it's a 3-year promissory note. How does that work with the actual tax that they pay? Do they pay on day one, on year one, the tax on the whole thing, or is that spread out in the future years when they get their payments, their promissory note payments?
That is correct. So it is a tax deferment strategy.
Okay.
It does not eliminate the tax on the sale, but it does defer it to later years. So you are only paying tax, the pro rata tax, that is, because we will calculate what percent of that payment is principal basis, let's say, versus what is the gain. So you do defer it to later years, and you only pay the tax for the portion of the note that was paid in that tax year.
There you go. So yeah, not everybody is prepared to do that, but there are some benefits.
Now, another benefit of that is you also will receive interest income.
Indeed. That's correct.
Which can be very beneficial.
Indeed. So you set that out at the beginning of the promissory note, which is personally guaranteed. I'm going all attorney wise here. I shouldn't be doing that, but a promissory note is normally personally guaranteed. And then the earn out. The same applies with an earn out. So
that is correct.
Okay,
yes.
Right. Okay. Good. Excellent. Good. Well, any other thoughts before we adjourn? Any other things we should be thinking about?
I think that it is just very important, like you said, if you are trying to purchase a business or interested, to use professionals. Of course, you can accomplish things without using professionals, but it is so important because, there are people like yourself out there who have done this for many, many years. And I know that you only sell quality businesses.
Oh, wow. Thank you for saying that. I try. Try very hard.
When I get a call and it's a referral from you for a business that you are selling, I know that I am willing to take that project on because I trust that this business is quality and that it has already been vetted by you and your expertise, that there is something here worth selling.
Well, that's kind.
So it makes my job easier.
Okay.
But we do still complete the same process. But absolutely, there's a lot to know about business out there, and there's a lot of people who don't understand, let's say, of what not reporting all of their income for many, many years of a business, what that actually means at the end of a life of a business, that you now want to retire and you want to sell this business and you take it to somebody like yourself. And we don't have the financial records to, to correlate to this amount of income that they're making. And I know that you've seen situations like that, and so have I. And I would say to anyone who is preparing to sell a business, start planning early and go talk to professionals like, Shaun or myself and ask what that process is like. Because like you said, if you're going back 3 years for financial data, we need to make sure that in 3 years, you're prepared to sell this business.
Okay. All right.
It is a lengthy process, and it doesn't start the day you list the business. It starts years before that to prepare.
If you're going to sell your business, prepare.
Correct.
If you're going to buy a business, be ready.
Yes.
That really means be ready to strike. Those are those 2 little mottos that I have. So that's terrific. What was the name of your company again? I forgot the name.
Just Infinity CPA.
It's Infinity CPA, and is that a website there?
Yes, absolutely.
And that would be
infinitycpa.cloud.
Cloud.
Yes.
Oh wait, stop. Oh whoa! I didn't realize that. Yes. infinitycpa.cloud.
Yes.
See,
we're virtual.
That's moving with the times.
We are in the cloud.
That's fantastic. Oh, that's great. I hadn't realized that. Oh, great. Excellent. Well, we've been very fortunate today to have you join us.
Well, thank you for having me
on the podcast. Oh, it's a real pleasure. It really is. This can be you might think it's a dry and dusty subject, but it's not. It's very, very, very important. Use the expertise of those who know. Adrienne, if you ever need a CPA for anything, Adrienne is the lady, but certainly for due diligence.
Yes, sir.
So thank you very much,
Thank
Adrienne.
you.
What a pleasure.
My pleasure.
Thank you very much.
Thank you.
Well, that's it for this episode. Thanks for listening to Happy Buyer, Happy Seller. The sad truth is only 15% of businesses listed for sale actually sell. Hopefully this episode removed some of the stumbling blocks to sale and highlighted the ways in which barriers can be overcome. If you're a business owner thinking about selling or a buyer considering your next step, I'm always here to chat and help you think through your options. So, to learn more or access additional resources, then reach out to me directly at www.happybuyerhappyseller.com. Don't worry if you're not ready to make a move yet. An early conversation can make a real difference down the road. And if you found this episode helpful, please subscribe to the podcast and share it with someone who may be considering selling or buying a business. Until next time, I'm Shaun Thornton, helping create happy buyers and happy sellers. Cheerio.